Chris, welcome to Crypto Weekly.
Thanks, Henri. Nice to see you, and thanks, May.
Well, so Chris, you've been working with banks, and not only traditional banks, but digital banks for many, many years. How ready do you believe are traditional financial institutions to work with crypto or offer crypto products to clients?
Well, most of the last decade, banks have been pouring water over crypto and saying it's completely illegal, it's for money laundering and crime, and they hate it. And that's mainly because it's libertarian and it's decentralized and it's not regulated. And what's been happening in the last few years, and we see this particularly in UAE, is that the central banks and the regulators started to try and institutionalize cryptocurrencies a little bit because, I always talk about the fact that if it's regulated by the network of the people, then how can you get your money back if it disappears? And FTX with Sam Bankman-Fried was a good example of that. So it's really around how can you make it something that's structured and trusted, but at the same time keeps the principles. That's quite hard to do, and the banks are working very hard in that area.
So, Chris, let me ask you as a banker, to what extent do you think that the crypto world is going to be game-changing for, it's going to cause huge shifts in the business models of banks? I mean, what kind of added value do you think that the crypto world will have an influence on customer experiences?
Well, I've always said that the greatest thing about cryptocurrency is that it's global and real-time and immediate. And it's digital gold, digital cash, all the stuff that you and I talk about a lot. That sounds great. But as I say, unless you lose your money, you can't get it back. It's a little bit like if your search goes wrong on Google, what's Google's phone number?
Yeah.
There isn't one. So you have to find a way to have a balance. And I think we're getting there. I mean, it's interesting, particularly here in Dubai, that the central bank of the UAE has come up with stablecoin as a key part of how they want to institutionalize crypto and make it balanced with reserves and proof that you actually have the backing behind the currencies that you're offering. And that's actually been interesting because Tether and Binance and others are moving here for that reason. And so I think we're going to see that emulated and copied. And with the new crypto president, Trump, we're going to see, I think, America copying a lot of what's happening here.
Okay.
It's interesting, actually, the U.S. may copy some of the initiatives that happen here, which is very interesting. But I want to bring it back to the banks, Chris. I mean, I know you've written extensively about trust and how people trust their financial institutions. You just mentioned if Google goes wrong, who do you call? In the crypto world, obviously, we believe that code is law, and really decentralization is based on code that's public. To what extent do you believe that could be enough to give people trust when it comes to financial institution, that the code is law, and how banks would be comfortable with that premise as well?
There's lots of layers there, Henri. That for the average person on the street, I don't think they understand code. So first of all, you've got to get the understanding of code. That is changing with Gen Z and Gen Alpha, which is the next generation. My kids, I should say I've got small kids. So it's changing because they understand code, whereas the majority of people don't, and that's where the issue lies. So they go to the bank, and then the bank says, you can't trust this. And it's very interesting because I've just debanked my bank for the very reason that under the UK regulations, they were being told to investigate money laundering of anyone who is using Coinbase or similar exchanges to do crypto. And I'm going, well, that's ridiculous. And they were asking me to explain every single transaction and provide proof of investment and return and documentation. I just went, I can't even bother, so I switched banks. And I think this is where, at the moment, we have this fine balance and a battle between centralization, decentralization, banks, and the power of the network of the people.
So let me ask you about 2025. And of course, we're talking about a new narrative for the crypto industry. Mm-hmm. We're talking about a Trump administration, a collaboration between Trump and Elon Musk. We're talking about a new head for the SEC. And we've seen already what all of that means for for crypto trading and for crypto prices. But in your opinion, to what extent would that actually push more banks and more financial institutions to increase their trust in this system, especially if we start to see more regulations and more clarity around the legal framework?
Yeah, I mean, I think 2024 has been a milestone year for crypto. It's made it respectable. And that is not just because of the new, American administration. It's actually to do with, we've seen ETFs and institutional investors and digital asset holdings and a whole raft of structures saying that this is cool. It's no longer something to be frightened of. You can actually absorb this and embrace it, which is being encouraged by many of the regulatory structures, although not those in Europe. I think MCIA is really interesting from the European Union.
Do you think that we're going to start to see a big divergence in the legal framework in crypto industry between US and Europe?
Yeah, I think there's a battle that's going to take place there. And right now, I talk a lot about European regulation strangulation. I think they really inhibit innovation with the way in which they want to, bureaucratize everything. And that's not going to allow you to actually have, things going forward. But at the same time, they don't want to have things broken. Fail fast is not the European mantra. And so it's kind of like interesting. And then you've got to look at China and Asia and, think about the balance between all those geographies. And there is a race to be the crypto capital. And I think, UAE is one that wants to be one.
So last question on this, Chris, really obviously mentioned crypto, the challenges the industry is having, the same challenges happen in the AI space. So when you're working with banks and they're looking at even integrating AI or using AI, are you seeing the same challenges take place in that space as we're seeing in crypto? Or do you think the fail fast could work better in AI versus in crypto?
Well, shameless self-publicizing is that my latest book is Intelligent Money. And when I started writing it, it was all about this friction between centralized versus decentralized currencies. And I talked about hi-fi, which is hybrid finance, where it's both central and decentralized. So hi-fi, I quite like, because I'm an old guy who used to have a hi-fi system. But in the middle of writing it, ChatGPT and OpenAI took off massively. And so it then became, well, what if I could decentralized and authoritize an AI to manage my money for me in a hi-fi system? And that becomes really interesting, because AI, it's when money thinks for you, rather than you have to think about your money.
There you go. Hybrid finance, hi-fi. We learned something new today, May. Yes, was Chris Skinner, the CEO of Financer. Chris, thanks for being with us today on Crypto Weekly.
Thank you so much, Chris.
Great to meet you both.
Are your children prepared for the future of money? Order Decoding Crypto with Henri and Hodler, the #1 new release kids book on Amazon.